Welcome to your weekly market checkup, where we dig into the story behind the numbers. And for the week ending September 19th, 2025, that story really starts with one very steep drop.
So let's just dive right in with a number that kind of tells you everything you need to know about the week. One single stock, just 5 trading days, and a drop of more than 33%. So, what on earth is going on here?
To get our heads around that number and what's happening in the broader market, here's our game plan. We'll start with how stocks performed overall. Then, we're going to zoom in on the biggest winners and losers. After that, we'll see where investors were putting their money instead, check in on the global economic pulse, and finish up with the key headlines that could really shape the week to come.
Okay, so first up, it was a really tough week for the entire Kenyan stock market. This wasn't just a few stocks feeling some pressure, it was like a wave of negative feeling just washed right across the whole exchange.
And you can see that downturn pretty clearly here. The NSE 20, the NASI, and the NSE 25, all 3 of the major indices ended the week deep in the red. This wasn't some minor dip, it was a pretty significant slide, which signals some widespread concern among investors. So you have to ask, why the sudden drop? Well, this wasn't random at all. It was really driven by a kind of a 1-2 punch. First, a major withdrawal of foreign money, and second, a really worrying profit warning from a major bank that shook local confidence. Let's look at that first part.
And we are not talking about small change here. The scale of that withdrawal was massive. Nearly 3 billion Kenyan shillings got pulled out of the market in just 5 days. An exit that big puts some serious downward pressure on the whole system, especially on the biggest companies.
And then, that second punch landed, and it came from the banking sector. Standard Chartered put out a profit warning, basically saying they expect profits to be down by a quarter. Now, when a bellwether bank like Standard says something like that, it doesn't just hit their own stock. It sends these ripples of concern across the entire financial system.
All right, so let's move from the big picture to the individual companies. Because even in a down market, you always find these fascinating outliers. And this week was no exception. It's a real story of contrast.
And wow, what a contrast it is. On one side, you've got Limuru surging nearly 10% because of some good legal and market news. But on the other side, you've got the stock from our intro, Home Africa. It absolutely plummeted. And why? Well, even though they posted their first profit in a decade, investors were way more focused on the fact that its liabilities were greater than its assets. That negative equity just completely overshadowed any good news.
Now look at this. Trading activity was incredibly concentrated. A massive 80% of all trading was focused on just 5 companies. What that tells you is that if you really want to understand the market's direction, you pretty much only need to watch the handful of big stocks that the institutional investors are moving in and out of.
So this brings up a really obvious question, right? If investors were selling off all these stocks and pulling billions out of the market, where did all that money actually go?
When uncertainty spikes in the stock market, investors usually pivot. They look for another place to park their cash, somewhere more stable. And this week was just a textbook example of that exact dynamic in action.
And here's your answer. The money went into bonds. Investors flocked to the relative safety of government bonds, and that caused trading activity to just shoot up by over 40%, a classic flight to safety.
But what's really interesting here is which bonds they were buying. Investors showed a really clear preference. The shorter 12.5-year bond was actually undersubscribed. The government didn't even hit its target. But the much, much longer 22-year bond, it was massively oversubscribed. This tells us that investors aren't just looking for safety right now. They're trying to lock in yields for the long, long haul.
Okay, so the key takeaway is that no market really operates in a vacuum. Let's pull the lens back even further and take a quick look at the bigger picture of currencies, commodities, and even crypto.
In the currency markets, the Kenyan shilling was pretty solid against the US dollar, which is great. But it did lose some ground against the British pound and the euro. And that just reflects those broader global shifts that can always influence where international investment money flows.
And that same flight to safety we saw in the bond market, you could see it playing out on the global stage too. Precious metals like gold and silver were up as investors looked for those safe havens. Meanwhile, the riskier stuff, like crypto, saw some declines. Ethereum, in particular, took a pretty notable 5% hit.
And finally, let's just touch on some key headlines from the week. Now, these stories might not have an immediate direct impact on prices, but they are absolutely shaping the economic and political environment that investors have to navigate. You've got quite a mix here. In healthcare, a new government program is launching at the exact same time that thousands of private hospitals are facing a potential debt crisis that could completely reshape the sector. On the international front, a huge new U.S. visa fee could impact the flow of talent and money back home. And then you have these major diplomatic shifts by countries like the UK and Canada, which signal these evolving geopolitical alliances that always have long-term economic consequences.
So this week was just full of conflicting signals, wasn't it? A clear move away from risk in the stock market, but at the same time, this really targeted long-term appetite for it in the bond market. And as these competing forces of fear and confidence keep playing out, the big question is still just hanging there. In a market full of contradictions, where does the next opportunity pop up?